Hi, Cece. How are you?
Not too bad. How are you?
Good, good. Welcome to my fireside chat. I'm in Canada
That's
at the
right.
moment. You're
Oh,
from
which
Canada as
city?
well. I'm actually close to
Yeah.
Montreal right now.
Where, Montreal? Okay.
Yeah. You went to college in Montreal, I believe, right?
Yeah. It's a very beautiful city. Yeah, nice fireplace.
Yeah, thanks. Thank you. So we don't have too much time. So I have a few pertinent questions for you. Obviously, you're a Chinese-born Canadian entrepreneur, very well admired in the cryptocurrency space. You've built businesses in China and Japan and the US. And you're most recently founder and CEO of Binance, a crypto exchange with the largest daily trading volume in the world. This past week, we've seen several major banks come under scrutiny for money laundering and other illicit activities. We've seen the FinCEN files come out, thousands of suspicious activity reports and other US government documents pointing at very prominent banks such as JP Morgan Chase, HSBC, Standard Chartered, Deutsche Bank, and many others for essentially laundering money for suspected criminals. In your opinion, why is money laundering particularly harmful to our economy?
Well, I think, basically, as a financial service providers in the industry, we need to fight illicit activities from either like fraudsters, scammers, hackers, criminals, even terrorists, etc. So I think everybody shares this responsibility. But typically what happens is once the rules are established, people find ways to get around the rules. And
Right.
There are people who just wants more business, gets more commissions, etc., and they want to and they either knowingly or unknowingly facilitate these transactions. I think both happens probably. I think money laundering to a very large degree is hard to detect. I think some of the activity may be some of the banks may be to some extent innocent. Some of them may be knowingly helping criminals, and also we live in a very complex world today, where when one country views somebody as a criminal, the other country may not. So it's very difficult to satisfy everybody. And also in traditional banking industries, the transactions are actually very opaque. So it actually takes a lot of effort to find out who's sending what, where is this transaction coming from, etc. So it's actually quite difficult to dig into the bottom of things. So when we deal with fiat currencies, we actually have a lot of chargebacks, frauds, or just even pure scams. And those and it's actually quite difficult. You have to deploy very sophisticated AI algorithms to sort of try to combat those, and it's not 100%. So I believe it's a combination of everything, and a lot of people have a black and white view on things, but I think the real world is a little bit gray. And some people think that the reputable banks are purely innocent, but that's not always. Well, that's usually not the case. Some people think that just because we're in the crypto industry, we must be bad, and that's also not the case. So
Yeah.
yeah.
So that
So
actually leads
I think
perfectly. Yeah. Go ahead.
yeah. Go ahead. Yeah.
I was going to say that leads me perfectly into my next question, where we know that the cryptocurrency industry has constantly come under fire for making transactions invisible for criminals. So how do you feel like the two compare? Because arguably it's actually easier to move money with an anonymous address than through a bank account.
So I think there's different aspects to it. It's not, again, I don't think it's black and white. For if you're using Bitcoin, which, like, for example, if you're moving a large amount of money, then you probably have to use Bitcoin, because most of the other networks the market cap is too small. And Bitcoin is a transparent ledger. So even though you can generate a new address and nobody knows who it belongs to, but once you have a couple of transactions, people can trace what other transactions led to that transaction. They can go all the way back to when the coins are mined. So all the way back to the Coinbase transaction. So this way, blockchain actually provides a very transparent ledger for everybody to analyze. So you may not know who that person belongs to, but if you piece together from a couple data points where you know where the transactions are from, and you can also do cluster analysis to see which transactions cluster around which addresses, and it's actually not that hard for algorithms assign a 10 score or like a score, and then so there's actually a lot of easy ways. It's much easier to analyze. So I actually think that the blockchain transactions are actually much easier to prevent fraudulent transactions, and it's actually much easier to track. There are some, like there are mixers, but then most money going through mixers are assigned a very high 10 score. And then there's also like privacy coins, which are harder to track, but the privacy coins are fairly difficult to use, and their market cap are not that high, so they're not able to facilitate very large number of transactions. So today, to be honest, if you want to do illicit activity, using fiat is much easier than using crypto.
Interesting. But when you're following the blockchain, for those people that are new that are listening to this, do you have to get to a point where they're cashing out fiat to figure out the identity, or are there other ways to figure out identity?
Not necessarily. I think so there are a number of blockchain analysis companies in the industry, elliptical, Coinform, chain analysis. So all of these forms have large big data analysis. They're fairly sophisticated to the point where they run nodes to figure out which IP addresses associated to which transactions typically. So they have a pretty good guess on which transactions are associated with what we call potentially a fraud or illicit activities. And some of them are black or white. Some of them look if it's a known hacker address and that fund is transferred, you can typically put that together fairly accurately. So there are a lot of different techniques being used, and then when those money goes to a centralized exchange, they are able, and if they are converted to fiat, that the user usually have some kind of KYC process, and you can usually gather more information about it. So the blockchain, the crypto industry is actually much more transparent. So yeah, I actually think I actually know that there's much less illicit activities going on in the crypto industry than compared to the traditional banking industry.
How would you say the volume compares?
Oh, it's probably 1,000 times less. I mean, so basically, for any meaningful amount of money that you want to move in the crypto industry, it's actually very hard to move them anonymously. So in the industry, there are third-party monitoring tools like Whale Alert on Twitter. They will make a tweet when there's a large transaction, and they have a database which can match most of the known addresses, like it's particularly exchanges, famous persons, etc. So, and then there are deeper analysis tools. So it's actually quite hard to move a lot of money on the blockchain without being noticed. So it's actually and the cryptocurrency market cap is so small that if you're moving like $100 million, it's actually you can't use like the cost of moving those transactions on the blockchain, and also the you can't really move that without going through a centralized exchange, and that makes it actually much easier to track. So cryptocurrency is actually not very good for a large amount of funds for illicit transactions.
Got it. So there's a recent allegation that has been made that money has been laundered through Binance. Do you guys have procedures in place to try and prevent that kind of thing from happening?
Yes, we absolutely do. So I can't really comment on the case, but we absolutely do. And we think we don't agree with that opinion, and we'll see what the results are.
Yeah, for sure. So it's interesting because the cryptocurrency space as a whole started in 2008 as a fight against corruption in the banks, right? So, when Satoshi Nakamoto invented Bitcoin, he said, Chancellor bails out on brink of second bailout of banks, right? Do you feel like that ethos is still alive in cryptocurrency to kind of take down the big guy, or do you feel like we're just kind of swapping one type of thing for another?
Okay, I think there's. I actually don't. I don't have either view. I have a more slightly a balanced view. So I think some in the crypto space are against banks, against governments, against fiat currency, etc. And some things that the cryptocurrency is used by drug lords and etc. So those are two extremes. Whereas my view is that cryptocurrency does offer a much higher degree of freedom in terms of when it comes to money. So you can have a higher degree of freedom in terms of transactions, investments, holdings, savings, etc. So it does offer a very much higher degree of freedom. And in my view, that we are just offering another option for users. So for people that who doesn't really, for people who value this freedom, for people who value this self-control, cryptocurrency offers that choice. So for me, I'm not against any bank. I'm not against anybody. I'm not against the government. I'm not against any single person. So I'm just trying to. I do believe that cryptocurrency offers a much higher degree of freedom of money, and we want to provide more people access to cryptocurrencies. I think cryptocurrency itself is not good or bad. It's not against anybody. And some people may use it for illicit activities, like there may be drug lords using cryptocurrencies, but those same drug lords probably use a lot more fiat currencies, probably 100 times or to 1,000 times more. So it's not that US dollar is bad. So it's just a medium of exchange. But the cryptocurrency, Bitcoin, for example, does offer a much higher degree of freedom and sovereignty for the individual. So you're much less prone to inflation. If you want to transact, if you want to send the money to somebody, people can't really stop you. The network will not stop you. You don't need to rely on a central party. So a third central part, like a central third party. So it does have all those advantages or higher degrees of freedom. So from my point of view, I think this is a great tool that people should use more, and we just want to provide that access. We're not really against the banks, or we're not really. So that's like so basically, in my view, that if I don't like the banks, I just don't use them, and that's the extent that I'm against them. Then they don't bother me, I don't bother them. That's fine. So that's kind of our or at least my view of the two different industries.
For sure. And I think for people that are sitting in North America, sometimes it's hard to understand that you may want to be your own bank, or you shouldn't trust the system. But then for other people sitting in countries like Lebanon, for example, that concept becomes much easier, right? So for context, obviously, the Lebanese banks have limited withdrawals and contributed to a hyperinflation crisis. And those citizens would have rather taken the risk of being their own bank using cryptocurrency, most likely. Where do you feel, where do you feel like the balance lies between a government protecting its citizens and yet still fostering innovation?
So I actually have a slightly more extreme view on this part, where there's a book called The Law. It's written in 1850s by Frederick Bastiat. And so I think most governments, I believe governments should be public services. So they should provide they should provide roads, police, hospitals, fire departments. They should provide this type of public services, and they should not be. There's another book called Economics in One Lesson. It's a very entry-level book. It's very easy. It's very easy reading. But that book talks in a lot of detail about whenever this government intervention is actually negative, it's bad for the economy. When government helps one party, it necessarily damages another party that's not visible. So people look at, this party's got the government helped this party, but that fund now most likely the government have tipped the balance in the economy, where this the party being helped probably is not competitive. They're not providing a valuable enough service to stay alive in this economy. So whenever government bail out big banks or any business for that matter, or whenever government steps in to do price fixing, they're necessarily looks like they're helping somebody, but they're necessarily damaging somebody else. And I believe in a free economy. I believe a free economy will work best. So I subscribe to that philosophy very strongly. So I believe that yes, in a free economy, some monopolies will materialize. But over the long run, if they abuse their monopoly powers and abuse their users, other people will take over eventually. So it's not always perfect, but I believe so. I subscribe to the view where government should be providing public services, and for that they can charge a fee, which is a tax. I'm fine with that. And if governments go bankrupt, they should not be printing more money. So I believe governments should either collect a tax or print money, one of the two, but not both. So if you're collecting taxes, most people, then that's your income. And when most people go bankrupt, they declare bankruptcy. They don't print more. You can't print more money. When more money is being printed, the population of that country gets poorer, because that's basically the same as taking money from everybody's account. So I have a view that governments should be really just purely focused on public services, provide the necessary services, and they can charge a fee for that, and that's perfectly fine. But I don't think governments should be controlling the economy and interfering too much.
Yeah, I think it's definitely a balance, right? So we pay X percentage of our income in taxes, and what service do we get from it? And at some point, if the taxes are too high versus what you're getting in return, and this is a big debate that's happening in the US right now, where taxes are not that low, they're higher comparatively to most of the world. And there's, no healthcare, there's subpar public education. And so people are starting to understand that, and they're starting to question what it is that they're paying for. Something that very few people actually know is I was an immigrant from the Soviet Union. So I was actually born in the USSR. And when I was around 4, the wall fell. And so I lived there until I was about 10. So I remember, a government falling and people saying, okay, we no longer believe in this government. And having property rights for the first time, and having a new monetary system, and then printing way too much money, and then them having to say, okay, this $5,000 note is just now 1 ruble, right? So obviously printing money is a method that's happening right now a lot in the US, and to some extent in Europe and in other countries. There's an argument that as long as your unemployment is high, you have room to do more monetary stimulus without causing hyperinflation, because inflation is correlated to full employment. Do you have any thoughts on that?
Well, I'm 100% against printing money. So I think it doesn't solve any problem.
Go Bitcoin.
I think basically go Bitcoin, yes. So I think anytime when you print money, especially taking money from everybody, let's say you print 10% extra money. That's exactly the same as taking 10% of balances from everybody's bank account and taking that and giving it to whoever you want to give it to. I think, so I think when that happens,
growing.
When the economy, it doesn't matter if the economy is growing or not. Money is divisible. When the economy is growing, let's say you have $100 for all of the one country, and then when the money is growing, you can spend fractions of that money. Our fiat money doesn't work very well in that situation. But most of the money today is already digital. So when you swipe a credit card, it's just a number that's being changed in some computer somewhere, and they can definitely go into more decimals if they want to. So I do not subscribe to the philosophy of printing money. Inflation is good for the economy. I don't think I don't think inflation is needed at all. Inflation is only is a smoke and mirrors tool it's most people don't feel it because most people are not taught about this in school, but it's actually governments taking money from everybody and giving that to somebody else of their choosing. And if everybody had a vote on it, I think most people would vote no. But today most people don't get to vote on that, and people kind of are more or less got used to the inflation money printing, and but I don't think that should exist. I think most governments they collect taxes as income, and they should use that to bail out companies that they want to bail out, to help individuals or groups of people that they want to help. That's their income, and they can do. Yes, I think it's fair for them to do whatever they want with it, to an extent. But it is public money. But printing money is never right, I think.
If you had to make a prediction where things are going at this point, so the Fed has said we're maintaining interest rates at close to zero until 2023, possibly longer. We already put about $3.5 trillion in monetary stimulus, probably a few more trillion more coming before the end of the year. Where do you think we're going with this? What will be the end?
To be honest, I don't really know. I think right now most governments are used to printing more and more money, and they think that, apparently everybody thinks, a lot of people think this is the solution to all of our problems. So we can print unlimited amount of money, but sooner or later, people are gonna find out that, okay, the cost of living is, the price of everything is increasing, and the cost of living is increasing, and printing money just made them poor. I think sooner or later, people are gonna realize this. And so I don't know what the reaction would be, or where we would end up. But I think basically from a choice now that we before most people do not have a choice. Every government is printing more money, and you basically you are kind of forced to become poor. But right now there are choices given cryptocurrency. So for the people who have kind of who share the same views as myself on this, most of us are already 100% in crypto. So we are kind of insulated from the printing of money, inflation, etc. in the fiat currencies. And Bitcoin is a limited supply. Most of the all the cryptocurrencies that I hold are limited supply. So they're not going to be inflation in those areas. So so I don't know where things are going to end up, but I do think that more and more people are going to realize and understand these concepts, and they're going to shift more of their wealth into crypto.
Okay, cool. I want to shift gears for a second. One of the hot new trends in crypto right now is DeFi, which obviously Binance has supported many of the projects on DeFi. For our new listeners, what would you say? How would you describe DeFi?
Well, so DeFi, there's a couple of different definitions based on who you speak to. I think there's a broader term where basically anything decentralized finance, any financial services that's provided on the blockchain in a decentralized fashion can be DeFi. Initially, like there would be like decentralized loans, etc. And then I think end of last year, beginning of this year, people took it a step further. There's some really interesting innovations. Whereas you can loan your money into what we call a liquidity pool, and that money is used to do market making for a trading pair. And given that if there's a large amount of money put in, then there's a very high liquidity, and the price spread is very narrow. And for people who wants to trade, they get really good prices. And then the spread and the trading fees are used to given back to the people who stake their money, so that they get a reward, what we call interest rate. So now this is a complete cycle that works on the blockchain. So then you know exactly how your money is used when you lend it. And then you can calculate how much interest rate you can get. So I think this right now, most of the DeFi tend to talk about this type of projects, the DeFi liquidity pools and automated market makers and swaps. So so most of the DeFi talks about this. I think this fundamental concept is very good. It's solid. It works. It makes sense, and I think it will continue. And then, of course, different projects compete on the yield that they will generate for the users. So different projects compete on the interest rates they can give to their people who give loans. So people will come up with more and more innovative ways, higher rebate rates, and they issue new coins. And most of those new coins have very limited circulating supply, even though the total supply is very large. But because the limited initial circulating supply is very small, the price gets jacked up really high, and then they use that as rebates to the people who stake their coins, the people who loan their money, and that looks like it has a very high APY, like annual yield rate. So they go up to the thousands of percentages per year. I don't think that will stay. So I think that's not healthy, and that's not healthy. That's not sustainable. It will come back down. But I do think that when all the dust settles, so I do think there's quite a lot of bubbles in the DeFi space now, and but I do think that when the dust settles, there will be a few popular decentralized liquidity pools, automated market makers providing swap functionality. Most likely, I would guess the annual yield rate is probably somewhere between 10 to 50%. I think 50% is really, really high already. So most likely somewhere between 10 to 30% range. But I think there is some fundamental innovation in the DeFi space, and I think those fundamental innovations will stay.
Got it. So
for new listeners, I would say exercise extreme caution if you want to invest in DeFi now. There's a lot of bubbles. don't follow the herd. Don't invest something because your friend tells you to. Only if you don't understand it, don't invest. Buy Bitcoins, much safer.
Right. So don't put all your money into Uniswap.
Yeah. Well, Uniswap is actually not the worst now. So Uniswap actually is a legitimate project, and it's actually going. I cannot speak to the Unicoin coin price, but Unicoin is like, actually they are the first ones who have come up with this invention. So I do think there's a high chance for them to stay around. But as an investment, I don't know if you buy the token, I don't know how that will perform, to be honest.
Yeah. There's another fun question I have for you. So a couple of weeks ago, we had something, I'd call it the sushi swap saga, where we had Chef Nomi steal something like $14 million worth of ETH in developer funds. And then somehow a couple of days later, he woke up and decided to give it back. And he actually issued a personal apology to several people on Twitter, including yourself, which obviously formed a bunch of different conspiracy theories, whether you're related to Chef Nomi, whether you had anything to do with the project. What do you have to say to the listeners?
Sure. So for the record, I still don't know who Chef Nomi is. I've never talked to him. I don't know him. I've never talked to the sushi project. I never invested in them. Binance is not invested in any sushi coins or anything like that. So that's just to clear up any conspiracy theories. So basically, how I got involved was when people were accusing Binance of listing the sushi coin, the sushi token. But Binance is actually one of the later exchanges to list it. There's like a dozen other exchanges who have listed it first, and some of our users are actually asking for us to list it. So this whole sushi coin is a complete drama, like unnecessary drama. So yeah, I mean, so basically, technically, so I actually only got really involved when people on Twitter were accusing Binance of getting there were conspiracy theories saying that we were involved, and I first made a tweet that I don't know him. I still don't know him today. And people actually got people more agitated for whatever reason. So after looking at the incident, actually, so I think, to be honest, nothing's really out of line per se. So the Sushi Nomi's coins was unlocked, and that was public knowledge. He didn't hide it. So he did have the authority and the right to move that if he wanted, and he did. And he sold it into Ethereum. It's not a very good vote of confidence for the project. But look, it might be a young kid. I don't know, probably in Southeast Asia, and probably in not in a super rich country. So for a young kid who with a technology background, he forked a smart contract. So basically copied and pasted a smart contract, changed a few things, tweaked a few things to the better, probably like some work. But now suddenly he has $14 million worth of funds, and he just want to realize it right away. To be honest, technically there's nothing wrong with it. He didn't cheat on anybody. He didn't lie about it. But it is not good for a funder to do that. So for example, for the Binance team, we have not touched the Binance team tokens at all, even though again, we also have the right, we also have the ability to move it, but we just left it there. So it's good I think it's good etiquette for the funding teams to have a long-term interest investment in the projects. But again, for Sushi, it's, they had the right to move it. Well, he had a right to move it. But then I guess a couple of days later, the kid's conscience got to him, and then he wants to return the money, and then he did. So after that point, I kind of stopped following. I didn't really follow it too closely, but I think they were proposing to give him $1.5 million. There was some debate on Twitter as well. But it goes to show that in a decentralized world, that there are a lot of this drama that takes place. And I think if you're investing in a decentralized project, you should really just know the rules. If the founders' tokens are not locked, they do have the right to move it, and they can sell it, and the project may suffer as a result of that. And there are a large number of third-party actions or actions by other people that you may not control that may impact your investments, and you gotta take those risks into consideration when doing those investments. So yeah, I mean that's the extent that I got involved in that project. But to be honest, I don't really know. I still don't know all the details. And we actually, there's so much other things going on in Binance that I actually didn't really follow that very closely. But it is one of those really interesting sagas that played out recently.
Yeah, I think it's always interesting when you see these projects come from anonymous founders, because when you're anonymous, you have way less to lose, right? Versus like, for example, with you, you've put your name and your face on Binance, and your reputation has become synonymous with Binance, right? And that makes Binance a more trusted institution, because we know you're going to do everything you can to make it an honorable one. Where would you say Binance will be in the next 5 to 10 years? Do you see it becoming more of a traditional bank institution with lending products, or do you feel like it'll stay as an exchange?
I think what our current direction or our current goal is to become more decentralized. So I think the point you just mentioned versus the anonymous funder versus a real name funder is a really, really interesting dilemma. So an anonymous funder do have one significant advantage. If you look at Bitcoin is more decentralized because we don't know who Satoshi Nakamoto is. So with the anonymous funder, initially, when the project is new, it's very hard to gain traction, to gain trust with a real person, real face. Like, for example, look, it's easy for Binance, and people either trust me or they don't. So it's easier for humans to associate that trust. But other than Bitcoin, if you look at the other projects, like say even including Ethereum, Binance Coin, BNB, we can most of the other projects we can associate a funder. And knowing that funder actually makes the coin less decentralized. So today, if Vitalik proposes some changes to Ethereum protocol, most people will probably agree. So he will still have very high influence. So it's less decentralized that way. Whereas in the Bitcoin space, you have all these forks and no one agrees with anyone. It is a problem, but at the same time, it is truly decentralized. No one controls that protocol. You can fork it, but it has to be a good fork for people to use it. So at the later stages of a project, having a anonymous funder is actually an advantage in terms of decentralization. So that actually is an aspect in longer term that actually I think probably Vitalik or myself are all facing to some extent. So for Binance, for our future, we definitely don't want to become a bank. We may even buy a bank, to be honest, but that would just be a small part of our ecosystem, just to facilitate fiat transfers, etc. We're not intending to be a bank. So I actually want Binance to become a much more decentralized organization, and this is actually an interesting experiment that we are trying to push. It's going to be interesting. I actually don't know how it will play out, but so far. We are definitely not going to the IPO route, and that requires a centralized entity, etc. We're actually sort of spinning out a lot of our teams and a lot of our community projects, etc. So that we actually want Binance to be an ecosystem. And longer term, I think if we look at 10 years or so, even 5 to 10 years, I think on this DeFi wave, the current DeFi are unlikely to overtake centralized exchanges just yet. But I think if you look at a longer term horizon, say 5, 10 years or 20 years, I think the decentralized exchanges have a pretty high chance of overtaking the centralized exchanges. And that's okay for us. And so that's why we invest very heavily in the DeFi space. We invest very heavily in blockchain developments. We have two independent blockchains bearing the Binance brand. There's a Binance Chain and there's a Binance Smart Chain. So we want to make those technology investments, make those R&D projects, and fund community developments in those areas. So eventually, if Binance.com, the centralized exchanges become smaller and the decentralized exchanges get bigger, that's okay with us too.
Got it. You're hedging your bets.
Yes. Well, I think that's kind of the overall technology, the direction that the technology is pushing us. So instead of fighting it, let's embrace it. So that's really what we're doing. So we want to disrupt ourselves. there's a lot of uncertainties. Like as a decentralized exchange, what's the revenue model? Well, we hold a large amounts of BNB. If there's a popular decentralized exchange, either on Binance Chain or Binance Smart Chain, we will still be incentivized. And there's probably other newer business models that we have, or newer working models we haven't thought about. But let's get there and figure it out. I think this is a situation where, for example, Kodak invented digital cameras, but they were making so much money on printing or films that they were not willing to try or push digital cameras. But then they actually lost a lot in the long run. So I think we definitely don't want to make that mistake. We want to jump into DeFi and embrace the new technology, and then figure out, well, try to make products that people actually use, and then trying to figure out the business model behind those.
So how do people invest in the success of Binance? There's the BNB coin. Is there going to be another coin for the smart chain?
No. So we have one coin for 2 blockchains. So we didn't issue another coin. So the easiest way for people to invest in the Binance ecosystem, or to some extent share the success of Binance, the overall ecosystem, not just Binance.com now, is to just buy BNB. So BNB is a smaller cap coin compared to Bitcoin, so there will be higher volatility. But BNB does have a large ecosystem plus the Binance team working on it. So the speed of development is relatively high. So if people want to invest, the best way is to buy BNB. But knowing that BNB is also a relatively new instrument, that's high risk. So I don't want that to be a financial advice. Yes. Yes.
Awesome. So I think it's time for us to wrap up. Is there anything else you want to leave our listeners with before we go?
No, not necessarily. I think basically I want to thank everybody for listening in, and we just want to provide more tools for people to access crypto. And we are very neutral. We're not against banks. We're not against governments. We're not against anybody, and we're not against DeFi. Absolutely not. We're going to jump into DeFi. So we'll see how things go.
Thanks so much, Suzy. Keep fighting the good fight. We'll talk soon.
Thank you, Tatiana, for having me.
Bye.